Hi everyone and welcome to Trades of the Week with myself and no other than Keith Sullivan. Now, today we're going to speak about something very important. Is this the time for you to sell every single one of your cryptos? Well, today you will find out what we're doing. And not only that, what is happening with all the exchanges? Are they collapsing one after one? Should you take your cryptos out of the exchanges or should you keep them in there? Well, that's what we're going to talk about today. Now, before we jump into today, though, there is a super exciting thing that is happening in the market. Well, the market, I mean in Investment Mastery. We are hosting a live one-day event this very Saturday. So make sure you actually come there because it's going to be an entire day where you will learn all the ins and outs of the crypto market, how you get started, and what cryptos we are buying to the strategies we're actually using. So if you're not doing your research yet in cryptos, this will be an amazing opportunity for you to get involved, and you will be learning from one of the world's best, which is Marcus de Maria, with over 20 years of experience in this field. So press the link below or floating around somewhere here. So make sure you press the link and we are ready to go. So make sure you sign up today so you don't miss this chance. Now, let's jump into it. So if we go over to what we were investing in last week, we have some very exciting news here. We have now put the stop loss at plus 2% on SEDG. Can we move, Keith?
Not yet, because we've not taken a profit. It's getting close. It's getting close.
Getting close, yeah. And on the contrary, with PRGS, obviously, we came in, we were in profit almost a whole percent, and then it went up and took us out. So that's not a moo, but a boo. And I have so much I can share with you, right? But it's so important you stay the course. I'm reading once a year, I'm reading 2 books about mindset. So it's Trading in the Zone and Trading Athletes. I'm on the journey of the trading athlete at the moment. And they said, right, don't be sucked into this losing. Trust the strategy, trust the game. And we just know, yeah, we've had a couple of losers, but the winners will come as long as we stay true to the strategy, which we can see here with SEDG. We have locked in 2% on this. And speaking about locking in profits and even break even, we have locked in break even on DFIN. And on DLX, there's no trade because it just carried on going up. So we never got into this opportunity. So make sure we cancel this one. So besides from that, Keith, what is happening in the market? What can we expect moving forward? And should we put all our money into the Buffaloes?
Yes, so, well, not yes to putting all your money into Buffaloes, but yes. In regards to the market, we had an interesting week last week. We obviously had midterms going throughout the week, and the midterm election historically has a positive effect on the stock market. Why? Because they make everything seem all rosy. They want your votes. They go, the economy's doing well, it's doing X, Y, and Z. And then people are putting money back into the market. And that has naturally seen on Monday and Tuesday a bit of a bullish move up. Wednesday came about and we saw a bearish move down. And the main reason for that is because there was all anticipation on what the CPI figure for inflation on Thursday would have been. Okay, so everyone was a bit fearful. They didn't know what inflation would have been, so they was taking money out of the market. And then Thursday came around and we had our 2 big announcements of the week, where we had our CPI figure, which is the inflation of the US, and we also had initial jobless claims. Now, let's go first over to CPI. Inflation showed a decrease. Okay, so it was above 8% the previous month. Analysts predicted 7.9%, and then it actually came out at 7.7%. So it showed that inflation had decreased compared to the previous month and lower than it's expected. So that was positive for the market, and people started to anticipate now inflation is coming down, the Federal Reserve are going to pivot. Now, please keep this in mind. At no time in history has the Fed rate been lower than inflation for inflation to fall. So we still could be seeing interest rate hikes. Now, that's number one. The second point was all about jobless claims. And this is the amount of people who are claiming unemployment. And that actually increased and above analysts' expectations. And it increased from the previous month. So it's showing us a potential weakening of the labor market. And I know you say, but Keith, why then in this negative news did we see a positive outcome? And that is because it might be also showing that the labor market's beginning to weaken and the Federal Reserve are going to pivot. So everyone's talking about pivot, lowering interest rates and so on and so on. But the main players are not. And that is the Federal Reserve. They're still saying we're going to be bullish. We're still going to be hawkish in the market because we need to get inflation lower. So we still could be seeing this short-term rally, which everyone is putting money into the market. It's perfect for us because we're taking profits on our VCAs. We're looking at more long positions in regards to Buffalo, but we still could see the next leg down. Now, what could cause this next leg down? It could be anything. But one of the things analysts have been doing now, earnings seasons are coming to an end, is they've been revisiting what they believe Q4 and then 2023 earnings to be for a lot of the bigger companies. And they've actually lowered them because they're expecting some backlash from what's happening recession-wise in the US within 2023. So we could start seeing decreasing in earnings for some of the companies, but yet the overall market then may bottom out and recover. So we still could see a bit more of a downturn, but right now we're seeing a short-term recovery, which is great for us, as I said, with Buffalo's and VCA. So please just not fall into the false sense of security that this market now is bullish. At this moment in time, if we look at our US 30 there, Dennis, what we're seeing on our US 30 is the market is still showing us bearish sentiment until we start trading above the last lower high, which is here, as Dennis is drawing perfectly. We are still bearish. Okay, it might have broken the downward trend of resistance, but as long as it's trading below that lower high, we're still seeing bearish movements in the overall market. Okay, so just don't jump on FOMO, don't jump into the market right now. It's a great opportunity to take profits and longs, but just expect that we could have some level of retracement lower. Now, that is it with the overall market. This week, no real news coming out about the economy. There's a couple of Fed speeches going on from representatives around the Federal Reserve, but nothing really too major, which could shift the market. But we also will see at the end of the week all around property. Okay, so we're going to see housing starts, and that once again is another leading indicator for us on the economy. And we'll give you an update next week on what is happening there. So, Dennis, anything to add?
Yeah, the only two things I want to add is the one market to have a look at is the US 500 as well, because as a 500, like the index of the 500 biggest companies in the US. And as Keith so rightly mentioned, on the US 30, we have broken out of the downward trend, but we have not done so on the US 500. So this could also be, we might go up here and then down. But neither me nor Keith knows exactly what's going to happen, obviously. And the reason we can make money is not because we know what's going to happen, it's because we use strategies. That's the only reason. So comment below, what strategies are you using to really maximize your exposure and also profits to the market? But also, like Warren Buffett's number one rule is to limit your losses. That's the number one thing. Don't focus on the profit, focus on limiting your losses, and the profits will come. So comment below, what strategy are you using? So two that we're adding at the moment as well, because we don't know what's going to happen really, is one of them is HQY, Health Equity Incorporated. Nice upward trend. It's on the support line, and we now have an order a little bit above that, a nice 3-to-1 reward risk ratio. So let's see how that plays out. But then we also have Mondelez International, which is a downward trend. And we have these nice red reversal candles, which we do love. So have a look at that as well. And if you do your research, you might be able to get in a better price than we did. So looking interesting, I would say, both of those opportunities. And from one market to another, we have seen a bullish move in stocks, which is awesome to see. Cryptos, however, has not followed suit. They were on the verge to go higher here on the 21st, beginning of November, the 5th, the 6th, the 7th of November. But then FTX came out. You've probably seen us. I'm not going to spend too much time on it. Make sure you watch the videos. We've sent out all the updates. But basically, the FTX exchange has gone under. Basically, and if you have money on there, we would love to support you. We know it sucks. We had money on there too. So let us know how we can support you. Just comment below or send us an email as well. Now, that being said, there are a lot of coins that are affected. So the one coin that were affected, which we're actually selling now, is FTT. Even though it's plus 41% today, we're selling it with roughly a 96% loss. That's almost 100% loss. So you will see that reflected on our results that we're minus 200%. Now, you might be saying, Dennis, why are you selling now? It's crazy because it's down so much, surely, so we should be buying. Well, not necessarily, because what's happening here is that we have now been, well, the fundamental has changed. So we are therefore selling. So since the fundamental change, it's not our strategy anymore. We take the emotions out of the game, we're selling. So I'd rather listen to my strategy than my emotions, if that makes sense. And if this goes up, let's hope it does, right? Let's hope FTX recovers. And if they do, then we might buy back. All right, then we might buy back if the fundamentals do change again to the positive. But looking at Bitcoin, we have now broken below the low over here, and we could be expecting, I mean, God knows what's going to happen with cryptos, right? Maybe we see something like this now, a move higher like we are doing in cryptos. Oh, sorry, in stocks, but then maybe we go down lower again to trick people in the market. So we'll see what's going to happen. There's a lot of bias in the market, a lot of rumors that there's more exchanges going down, like crypto.com, for example. They managed to send $40 million worth of cryptos to their wallet, they thought, but they sent it to gate.io, another exchange. So they needed to then ask for it back, which is crazy. What are they doing? So people, there's rumors that crypto.com might go under as well. Now, we don't know. We don't know if any exchange is safe. We thought FTX was safe. We think Binance and Coinbase is safe. But what we're doing is we are definitely withdrawing our coins to wallets, such as a ledger, a hardware wallet. So make sure you do that too. I mean, that's what we're doing at least. We can only share what we're doing. So we're withdrawing it to keep them safe. And the question, of course, is, like everything is going under, are we selling? Are we selling, Keith? Yes or no?
No, of course not. Why would we sell
at
a great buying opportunity?
On the contrary, like Keith is saying, it's a great buying opportunity. We have coins such as Bitcoin being down 70%. We're adding to some positions. Polkadot being down 90%. Guys, this is the time where everyone else is panicking. Everyone else is selling, of course, the institutions they're buying. But we have seen this before. 2017, we're looking at a monthly chart, Bitcoin down 84%. Currently, we're only down 76%. So we might go down more. But you know what? After winter or a bear market comes spring. You know what comes after spring? Summer. So everything goes in cycles. So as long as you do your research, I would say it's a great opportunity to buy. For example, Ethereum just became successful with their merge. We spoke about that earlier. But what's interesting here is what Keith is going to mention a little bit more about. Maybe you can mention that, Keith. Why are we so excited about Ethereum at the moment?
So in regards to Ethereum, we had a look on the research side that 60% or just over 60% of the nodes which help run the POS system for Ethereum is running now off Amazon Web Service. So if you don't know, Amazon Web Service is a cloud storage system, okay, where storage data is stored. Now with Amazon Web Service, we are also seeing that they're doing managing of blockchains. Okay, and this is where Ethereum's moved over because it's going to allow a lot more growth in regards to the nodes, in regards to the data that's going to be stored. Now, why is that? Why is that a good thing? Because if we have more nodes running on the Ethereum blockchain, okay, that means Ethereum's going to be quicker, it's going to be cheaper, and it's going to be more efficient. Okay, so that is what Ethereum wants to do. This is why people move or projects go from the POW system over to POS. And now they're utilizing this area. It's really going to show a leveling ground for growth in regards to Ethereum. But on the contrary, we can also say it could be positive for Amazon as a company, because if Amazon are now utilizing more blockchain management as another stream of revenue for companies, for their company, we can then also see Amazon grow as well. So it's a twofold there. Good for Ethereum, good for Amazon. Anything else to add there, Dennis?
No, that's perfect, right? So, and me and Marcus, I think we mentioned this a couple of weeks ago as well. We were at the Web Summit, and the development that is happening in these cryptos are amazing. And, just think about, why are Amazon, why are IBM, why is Google all getting involved with cryptos? So we think it's going to be huge what's happening next with cryptos. We just don't know when. So another big conversation is Solana. So Solana is down roughly 90% from its high, the local high that we have pointed out, and we have now entered by the minus 90%. So the reason this has come down so much is because FTX, or the company Alameda Research, which is the owner of FTX as well, they owned a big amount of Solana tokens or Solana coins, but The same here. The fundamentals of Solana has not changed. So the cool thing is, when something like this, a black swan event, happens to the crypto market, all the good coins get affected too. Now, we don't know for sure, but according to our research, we think Solana is a good buying opportunity. So we are getting into Solana as well. So also the same there. Comment below. What are you getting into? So that's a bit what we're doing with cryptos at the moment. We're getting into Polkadot, just adding to that. We're selling FTX or FTT because the fundamentals has changed, and we're adding to all the positions we can according to the strategy. So we're already down quite a bit on many of these, but we're adding where we can. So we keep following the strategies because we think when the summer comes, it's going to be awesome. I mean the summer in the crypto market, not the actual summer in that sense. So moving over then, so what we're doing is, in a nutshell, we're taking coins off the exchanges because we don't know what's safe, what's not safe. Now, no one knows. And we're buying into opportunities that are good. We're selling FTT because the fundamentals has changed. And last but by no means least, I do want to jump into stocks as well. Now, we have seen quite a big rally in stocks. Looking at a couple here on Goldman Sachs, we have the stop loss at plus 20%, which is awesome. We can soon move, Keith. Hold your horses. We can soon move, or hold your cows, maybe is better. JP Morgan, stop loss at plus 15%. Caterpillar, stop loss at roughly 30% at the moment, which is awesome. So let's keep raising that stop loss. Now, Keith, why aren't we just taking the profits here at 20%, 25, 30? Why do we just don't do it? Why don't we act on emotions? Why don't we raise our stop loss?
So we've worked so hard with VCAs. We've been accumulating during this whole bear market as the market drops. Now the market's recovering. We don't want to put a ceiling on our profits, right? We want to allow our profits to run as much as possible to really reward us for our hard work and our patience. Okay, so this is why we don't put a take profit in VCAs. We just have our stop loss just below. So if the market carries on pushing higher, we carry on moving up our stop loss. But then if the market does fall and retrace down and takes us out, okay, we've then taken as much profit as possible from that coin. So we've milked, stock, we've milked the cow as much as possible. And then we're going to look at a new opportunity. Remember, it's not one investment that's going to make you a millionaire. It's the compounding growth of numerous investments. And this is what you're seeing now. The hard work we put in a few weeks ago, everyone's going, you're losing money, you're losing money. We're like, it will turn. And now the market's recovering. This is where we're now going to look at taking profits. And if the market does drop again, at least we've made some money during this bear cycle.
Yeah, no, exactly. Perfectly, right? Perfectly put. And I love what you said there, right? That now you've been like, oh, these guys are rubbish, right? They just keep investing, it keeps falling. But now we have locked in profits there. We locked in profits on Walgreens Boots, 20%. We locked in profit on Eastman Chemical Company, stop loss at 15%. Nvidia, we have the stop loss was hit, unfortunately. So we made 15% on Nvidia. And then on ECL, we've also put the stop loss at plus 10%. So you can see we're locking in a lot of profits here, and hopefully it does keep going higher. Now, we don't have any new VCAs this week because we're in so many already. So now we're reaping the rewards in a sense instead. So no VCA for this week. So in essence then, just to summarize this, we have now had a 1% loss here on Buffalo, so boo, right? One of them, but we locked in a little bit of profits here that will come over time. With VCA up 15%, that we have locked in, so that's a moo. But then on small caps, we have then sold FTT. We put that out. Sucks, but that's how it is. The fundamentals changed. That's what we're doing. So minus 200% there on the money invested there, just to bring this down a little bit. Then of course, usually we don't sell in this, but when they go to zero, we do. That's why it's so important to not have all your money in one crypto. Make sure you diversify as well. So with that being said, everyone, make sure that you do attend the CC1, our crypto masterclass this weekend, a whole day, together with Marcus de Maria, where he's going to teach you all the ins and outs and what's in store for next year as well for cryptocurrencies. So make sure you sign up now before it's too late. So with that being said, if you enjoy these videos, make sure you hit that like button, subscribe to our channel, and also hit that alarm bell so you get notified whenever we release a new video, so you can be updated on the latest things that are happening in the crypto market, and also see are the actions we're taking in this as well. So from myself, Keith, the whole team. We really hope you enjoyed today's edition of Trades of the Week, and we cannot wait to see you on next week's Trades of the Week.